Welcome back to the channel, folks. This is Moments with Mitch. I'm Mitch Brewer. I'll be your host for the show, and I have a special treat for you today. I have a friend of mine that is in the home mortgage business. We're going to find out what's really going on these days. So everybody, welcome to the show, Ben Hawkins. Some people know him as LendwithBen. So here he is. Let's bring Ben on. Hello, everyone. We're here to our special treat today. I'd like to introduce you to the man known as LendwithBen. Ben, tell us about yourself.
Hey, everybody. First of all, Mitch, thank you so much for having me on your show. Really appreciate the opportunity. My name's Ben Hawkins. I've been a licensed mortgage originator for 15 years now. So it's, been through the peaks and the valleys, if you will, as it pertains to markets, and just love what I do. Have a great passion for our business and what we're able to help families achieve with the dream of home ownership. And we take it very, very personally, and making sure that every family and all of our wonderful folks that we service close on time or early every time.
Okay, great. So 15 years. Wow. You've seen some changes, right? And
absolutely.
And especially in the last couple of years, some big changes. So I guess let's kind of start out with and also I guess my main question is, I saw a thing like in the news. So when I see something like online or something, I kind of treat it as a rumor. I'm really big on like trust but verify. Trust but verify. You probably are familiar with trust but verify on some of those income statements, right?
Certainly.
Okay, so I heard this thing that they were going to try to almost penalize a person if their credit score was above 720. It was like if they got over 720, like they wouldn't get the sweet deal. It was almost like, you know what I mean? They're moving that work what somebody did to get their credit score good. They were going to use some of that reward and move it over to the people that maybe didn't do so good on their credit score. Is that like, what is that?
So it's what believe you're referring to are what are called LLPAs, or loan level pricing adjustments, that Fannie and Freddie rolled out. And it's basically, there's tiers. So if you have 760 plus credit, you're in like a class by itself, right? 740 is a different tier of pricing for the rate. 720 and below are different as well. There are certain hits associated with the interest rate based on loan to value, debt to income, and credit score, obviously. So what they've done is it's not so much, when it first came out, I know what you're referring to was, people with higher credit scores are going to pay more for their mortgage. Right now, everybody's paying more because the interest rates are inflated. They truly are. But where you really get into it, I think where it kind of got missed in the messaging when that first rolled out is, it's funny that it's not really funny, but it's on my own perspective. When you put down 20% on a mortgage, your rate actually costs a little bit more than if you put down 5 or 10%. That's where the variance is coming into play. Yes. And I think a lot of that has to do with the fact that there's no mortgage insurance to pad investor risk when you put down 20% or more at the time of purchase. And therefore, there were some pricing adjustments to the worse, that if you did put down 20%, it wasn't as sweet as if it was at 5 or 10% down. Now, if you put down 30% or more, you actually get sweeter pricing than all of it. So it really had to do more with the down payment scenario. Okay. And obviously credit is very important, but it was more along the lines of the down payment scenarios, allowing folks not putting as much money down at the time of closing to have a better rate, if you will. And I think they justified it because of the fact that you would be carrying mortgage insurance. So the investor is backed. The investor has that insurance if, God forbid, something happened and you couldn't make your mortgage payment and went into default, that the investor is covered. So especially during the kind of a turbulent last few years with income and employment for people and things like that, and obviously the higher rates, it gave the investors more of a kind of a warm and fuzzy feeling knowing that mortgage insurance was tacked onto those loans.
Wow. I would have never, my mind just got blown right there. I didn't expect that.
Yeah,
I
I
don't
mean,
think you
honestly, we didn't either as a
score. So
yeah,
I
I
think you
mean,
went and ruined my credit score, right?
yeah, it really, what we look for when somebody has a credit score in the low to mid to even a high sixes, we typically look at a government type product like FHA, because the interest rate is going to be less expensive and the mortgage insurance is capped at 0.55% of the loan amount. So there's a lot of different varying factors that come into play when we look at someone's credit profile and financial profile to make sure that we're putting them in the right loan, in the right situation, and an affordable payment for their family. It's very important. And we have a whole portfolio of probably 300 to 400 different loan products. So there's a lot of different options out there for folks.
Yeah.
And it really, we just make sure we cater each and every loan scenario to those specific clients. It's not one size fits all.
Yeah, so that I can relate to that. That's the way my business is in the insurance and retirement space.
Right.
So, are you like me? I in my space, I'm an independent broker. Like I'm not locked into selling, like one company or something like that. I'll go to the marketplace and shop. Basically, is that the same scenario you're in, or how does that work?
Pardon me. So I've been in the broker space. When I first started originating in 2006, I started out as a broker. I am in the retail lending sector now. So we fund, close, underwrite, process everything in-house. Everything is done here, and we do not outsource or broker to different companies. And there's many different reasons for that. But to your point about shopping rate and things like that, we're extremely competitive on our pricing because we compete with brokers every day. We compete with banks. We compete with everybody. And so our pricing is set to be able to be competitive in the market, but also still be profitable as a company. If you're not making a profit, some people, you're giving it away, just dirt cheap. Well, if they're doing that, they're not going to be in business very long, and that's what we've seen is kind of a race to the bottom, if you will, from a lot of lenders in the last year and a half to 2 years, and they're paying the price as a result. You see some of the bigger online entities, a lot of these call center companies. One of them, I'm not going to mention them by name, but in Q4 of 2023, they lost, I think it was $980 million in a quarter.
So
you can't sustain doing those things. So what we do is we make sure that our pricing is fair for the consumer, affordable, and also profitable for the company. It has to be, or else we wouldn't be able to do what we do for all of our amazing clients.
Right. Yeah, I've come across that in my industry as well. I can remember one time I sat down with a man, and he was my client, and he asked me to look at something else, and I told him, I said, I like your book better. And he said, well, are you trying to talk yourself out of being my agent? And I said, no, sir, I love being your agent. I'm just not willing to lie to you to be your agent.
Right.
And I said, here's what's going to play out with it. I said, they can't sustain this, so get on the horse and ride it. It's going to be a year, maybe two, and then they're going to leave. And when they do, I need you to call me back. And that's exactly what happened. I love it when they call me up and say, Mitch, it happened just like you said.
Yeah. I mean, you can kind of see the train wreck coming, right? You can see it before it even happens. As it pertains to your point about if somebody comes to me and they've got an incredible deal from a competitor that we can't match, which is very rare. I mean, I don't see it very often, or we can't beat. I want to do what's best for the client. Obviously, I mean, I do enough business to where I don't feel the need, and never would, even if I wasn't doing a lot of business, I would still not feel the need to be dishonest or do something that's not in the best interest of my clients. Yep. So to your point, sometimes it just is what it is, and you have to say, you know what, you got a heck of a great deal, go for it. I've
found a workaround. I've found a workaround now through my connections and networkings and my contracting and stuff. So it's opened that door. I don't have to do it like that anymore. But the customer has to come first, because if I know for me as a businessman, if I do a great job, I'm really fortunate if they tell one person. But if I were to fall short in any way, they're going to tell everybody they know.
Right.
And so I decided, and I know this has really benefited me, and I think what I'm hearing is you're working the same way. I decided in my mid 20s that my reputation and that was like super important. And as long as I
Right.
kept my reputation good and things, that word would spread, and I can be a trust factor in the
Absolutely.
economy.
Yeah, I mean, one, the betterment of the folks we're so grateful to be able to serve is what's important. I mean, at the end of the day, their financial well-being is of top priority. The great news is I don't lose a lot of deals. Like I said, we don't lose a lot of deals over price. It just doesn't happen. And the other thing too is you have to be very careful out there when you get something that looks too good to be true. First of all, if they're going to offer you something, you need to request right then and there a locked loan estimate. You need to be able to see that it is locked and that they can stand by what they presented to you. Also, the other side of it is if they're giving everything away, can this company perform well when it comes to process and underwriting and get you closed on time? People are putting up $5,000, $10,000 in some cases on due diligence and earnest money. And if you stand to lose that much money, and you go with a lender that doesn't have your best interest at heart, a big call center that expedites you to 10 or 12 different people instead of having one point of contact like myself or obviously we have a great team. I mean, when you work with us here at Southeast Mortgage and the LendwithBen team, you're working with three different folks: myself, my licensed loan partner, who's a very intricate part of gathering documents and making sure everything's nice and tidy on the front end, and then our processor. Those are the three individuals you'll be working with, but you're not going to be working with 10 or 12 different people that a lot of cases when you get them on the phone have never even looked at your file. So you get stuck in limbo there. There's no worse feeling than not knowing where you are in the process. So, we take, like I said, we take a lot of pride, and as I know you do as well, Mitch, in servicing our clients, because you know what? I don't care about just the first transaction. I want them to come to me for every loan that they do afterwards. And also, like you said, refer me to all their friends, family, and work colleagues.
Yeah. And I basically, I'm contacted constantly from marketing people, and I just tell them like I do okay with my referrals.
Right.
This is basically my marketing piece here is, I can have a free YouTube channel, and because as long as people know who I am and they can get to know me, and hopefully they'll like me and they'll learn to trust me, then I don't, people do it different ways. But let me ask you something. What, because you mentioned like the train wreck, like, is there anything in the last, let's say, couple of years that really was like, wow, I didn't see that coming?
Yeah. I could go back 3.5 years ago.
Because I know you, like, I've seen on your Facebook, we're Facebook buddies, right? So
right.
I saw you call something last year. You said there's fixing to be some big layoffs in the mortgage industry, and I noticed that because my dad, when I was growing up, my dad was a loan officer, and if you can imagine being the loan officer like in the 1970s when Jimmy Carter was president. As I got older, I started really having a better appreciation for what he had done. I mean, so
it's been rough. It's been rough with the leadership. I mean, it's not a political commentary. This is me just telling the truth. It has been awful. Mortgage rates, if you look back 4 years ago or 5 years ago, even 4 years ago, they were at historic lows. And there were a lot of reasons for that, but it was, the economy was booming. Right now, inflation is so hot and interest rates are inflated. It's really brought the hammer down. I think the biggest surprise that I've seen is the disorganization and the misinformation that's been presented out there, not only by companies in my field, but most importantly, leadership within the Fed and everywhere else. And I'm not here to badmouth anybody, but right. when they come out with all this wonderful looking economic data, okay, and then 2 or 3 weeks later they revise the numbers and they're so far off, being the opposite way, like the opposite direction of good. It just isn't good for the consumer. It's not helpful. It's not good for the market as a whole. And right now you've got so many people that have a 2.875 or 2.5 or 3% interest rate, even in the 4s, and they don't want to sell their house and lose that particular rate. A lot of folks are renting those properties out, which is kind of smart if you think about it, unless you need the money for the down payment. It's a very smart way to do it because you've got such a great rate, and rates are obviously higher than we want them to be. One thing we are doing as a company, and have been doing this for the last couple of years, is we are offering a low-cost refinance. So anyone that closes with us while rates are higher than we would like for them to be, which I've got a whole Rolodex full of people. I just dated myself, right? I still have a Rolodex on my desk. But I have a whole Rolodex full of folks that we've closed business with, and they are getting a call back as soon as rates do drop. But the biggest surprise, like I said, Mitch, I think has been the disorganization, the information that comes out, and just the overall stall in correcting an issue that could be corrected if they wanted it to.
It kind of creates a panic environment, doesn't it? And when people are panicked, they probably don't make the best decisions sometimes.
That's exactly right. And that's what's happening in the markets and has been. So I'm very surprised at the way that that's come about. A lot of our inside leadership, you say quote unquote leadership within our industry, we're predicting that May of last year was going to be a big time for rates to drop. Well, they went the exact opposite way. So really, there's no method to the madness of what's going on, other than, in my opinion, this could be fixed. They're not willing to do it for whatever reason, and we just have to weather the storm. It is still a great time to buy a home, and there's a reason for that, Mitch. I'd like to touch on real fast. Right now, while rates are higher, you've got a lot of buyers that are sitting on the fence. Okay, that is going to cause, when you make an offer, not to have to go up against 5, 10, 15 different offers. A lot of them cash, a lot of them 20, 30,000 over asking, the feeding frenzy that we were going through a couple years ago. So there's less competition out there for you in the form of buyers that are out there looking at the same house. Therefore, you're going to pay less for the home. Now, if you wait till rates drop, guess what? Everybody else is waiting too. Here they come, and here come the multiple offers. Here comes the highest and best bidding. You'll pay $20,000, $30,000 more for the home. As a result, and in turn, if you buy it now while the rates are higher, you're going to pay less for it. And it's a matter of when, not if, rates drop.
That's
refinance,
That's
save the money, and you've also paid $10,000, $20,000, $30,000 less for the house. So that's an honest review of an assessment, and I've been saying it for a long time, of why it is still a good time to buy. And we hope folks take note of that.
Would you say it's easier to get a loan right now?
I mean, as long as you have your ducks in a row, you know what I mean? If you follow the rules and follow the guidelines as far as income, assets, things like that, then you're good to go. I mean, we have to check mark everything. Back in 07, 08, when the crash hit, there were stated income, stated assets. You had a 720 plus credit score. You'd close in 7 days, and we didn't need anything. I mean, it was just something that ended up spiraling out of control as a result of the loose lending practices. All that's been tightened up, and we review and verify everything. So as long as you have your ducks in a row, you're forthcoming and honest, and you need to make sure you're working with a licensed professional that's been doing business for a good amount of time. These call center lenders, these places that employ people that maybe they've been originating loans for a month, they may not understand the guidelines when you tell them, hey, I haven't been employed for 6 months since I left my job, and I want to do an FHA loan. Well, you can't do that. You got to wait 6 months after you're back on the job to be able to order an FHA case number. There's nuances like that. That's just one small example. But there's things that I know and that experts in the industry know because we've done it for so long. So it's very important to know who you're working with, and having somebody that has a local footprint really, really helps as well.
And you're in Wilmington, North Carolina, is that right?
Yeah, Mitch, that's correct. I'm licensed in the state of North Carolina. My company that I represent, Southeast Mortgage, is licensed in 16 states, and it truly is a Southeast regionally based company. So we focus on Florida, Alabama, Georgia is where we're headquartered, and North Carolina, South Carolina, you name it, and anywhere around in our little region, our pocket, Tennessee, even Kentucky. So there's a lot and there's other states, but just to kind of give you an idea, that's really what we focus on is our own turf and territory.
Yeah, I see those pictures of you on your boat, and I'm making a little note. Ben has a boat.
Yeah, man. I named it the Clear to Close because I figured I needed a lot of clear to closes in order to pay for it. So we've had a lot of fun with it, and my family and I, we enjoy getting out. Boat season's right upon us. I can't wait to get out there and spend some time on the islands.
Right. Okay, so if somebody if they want a loan and they lived in Florida, you could still do the loan here in North Carolina, right? Like it didn't.
That's
they don't
correct.
Have to live
Yeah,
in North Carolina. Yeah.
That's correct. I've got as a matter of fact, I had a client call me an hour and a half ago, actually, who wants to get started on a refinance down in Florida. Refinances, believe it or not, they're still around, even with the higher rates the way they are. This gentleman had a particular reason, a personal reason why he needed to do it and wanted to do it, and so we're happy to facilitate that. And what we do, we have folks go to my website, LendwithBen.com. Hit apply now with Ben. It takes about 10 or 15 minutes to fill out the application. We just ask that they fill it out as accurately and thoroughly as possible, and we get started for them. So they can upload their documents securely to the portal, or they can email them securely to our server, whatever works best for them. But we don't have to be face-to-face. Now, if there's folks in North Carolina that want to meet with me, we have a beautiful office at 820 Town Center Drive, Unit 120 in Wilmington, North Carolina. It's in the Mayfair Shopping Center. Beautiful space there, and we invite as many folks as we can to meet face-to-face if that opportunity presents itself.
Great. Yeah. So if a person was like they just didn't know where to start or what to do, I mean, I'm assuming like calling Ben would be the first move, right?
Give me a ring, 910-352-3373, 910-352-3373, the website, LendwithBen.com. I'm available 24/7. Put me to the test. I don't mind answering calls in the evenings, weekends, whenever. So yeah, it's so important for folks to get their financial game plan in order early. You don't want to wait till you find the perfect house and then to get pre-qualified. You don't have enough time to be able to make sure you're making the right decision and also researching the right product and things like that. It's always the best idea to go ahead and get pre-qualified first. That way you know what you can afford. I mean, there's no point in finding a $500,000-$600,000 home if you can only afford a $300,000 home. You know what I mean? And if anything, that's going to break your heart. So we want to meet, and also too, we can identify any issues that may prevent somebody from being able to obtain financing and get that corrected in a very quick time frame. So that way they're ready to buy their next dream home, right out the gate. We can at least give them the tips that they need. And if they'll follow the suggestions that we offer them, if the answer is no right now, we can turn that into a yes very quickly.
Let's talk about some of maybe the not so pretty side of it, because we know that times they're rough for some people. I mean, there are people out here prospering and doing well, but some people are, like I have some friends that work in the car repo business, and they are busy. Being a lender, do you see, like, I guess maybe at least the loans that are coming through your company, are you seeing some foreclosures, or do you just not see those numbers?
Foreclosures are on the rise, but I mean, I feel like we do such a good job with making sure people are comfortable with their payments that it really would have to be an extreme life circumstance that caused them not to be able to continue to make their payment. And then there's options with servicing companies. Whoever's doing the servicing on the mortgage, there's some payment arrangement plans, things like that they're there to help people in the time of crises. So yeah, I mean, foreclosures are on the uptick. That's what happens when gas is $4 a gallon. That's what happens when the cost of groceries is up 43% since 2019. I mean, people are feeling it. I mean, I know a lot of folks out there that are feeling the pinch, but we're hanging on. We're hanging on for dear life. And, and the thing is, we're there to help those people. So we definitely want to make sure they're comfortable with their payment scenario first and that kind of thing before they jump into buying something that they potentially can't afford.
Because I know, like, real estate and this whole game is a really hot topic right now. And I see people on certain platforms and they're like, hey, you can just go and like take over this loan and stuff. And that sounds all great, but I'll tell you, back to the trust and verify, I went down to, I have a local regional bank that I use for a business account that I opened. And when I go down there, as soon as I even mention, like, I can even say half the word mortgage, and they already like light up like a Christmas tree and start telling me, you can get these grants and there's programs and blah, 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 blah. And I said, well, okay, that may be something that we could talk about, but I have a question. And just like I asked you the question about what I considered the rumor, because I'm trying to trust it, I'm trying to verify these things. And so one of the things that I saw on, there was about this assuming the loan. So I asked the lady, I said, I do have a mortgage question. If, I'm seeing these people saying, like assume these loans, save the house and all this stuff. I said, if I assume a loan, is it possible that the bank could call that note?
Here's the deal. You're not going to see as many assumable loans as it pertains to conventional and FHA. It's just not, they're not going to do that. The investors won't do it. Now, VA loans are assumable. However, the risk that you're referring to is if the person that assumes the VA loan, okay, from the initial veteran, that the person that bought it, the initial veteran who bought the house first, if that second, if the assumer, right, the one that's assuming the mortgage defaults, that goes against their VA credentials and they can't get another VA home. It also limits the amount that they're able to borrow on their next VA loan because that entitlement is still tied up into the original home that was assumed. So it's really a bad proposition, I'll be honest with you. Right. Other than it's great for the assumer, but for the initial veteran, it really puts you at risk and I don't recommend it.
Right. And that's what she was like, yeah, but me is, I'm 58. And so I've been around long enough to know to ask some questions and the real good clients are ones, because if like in my business, if they're not asking questions about what could possibly go wrong or, guarantees or, things like that, at least looking for the landmine, that kind of throws up red flags for me. So, I like to ask about things like that and just, to be clear, because right. I think when a person signs a contract, they need to really understand. So are there other, like if, people that really just don't know, what would you say would be the biggest threat or mistake, like the landmine that they really just don't know?
Well, one thing would be buying a vehicle or opening up new lines of credit during the mortgage process. That's a big no-no. You can't do that.
So don't like get pre-qualified and then celebrate by going to get a new car loan.
That's exactly right. Or if you do, you need to tell your mortgage originator immediately. It'll totally mess up your debt to income. It also will drop your credit score. It's just not good. Another common mistake is I see a lot of self-employed borrowers not having everything reviewed up front as far as their tax returns and averaged and things like that. And that's a big deal. If I have a self-employed borrower that comes to me, first thing we're doing is getting their tax returns. I mean, we're obviously going to pull credit and look at their app, but I'm not issuing anything until we have those returns reviewed. And so there's a lot of different mistakes people can make. I mean, a lot of times people will be like, hey, I paid this thing off and I closed the account. Don't do that. Don't do that, because it'll actually have a negative impact on your credit score because you don't have that positive active trade line still open for that credit account. So there's a few different things that we see that are big no-nos that we try to prevent to the best of our ability. Okay, great.
So let's just go over real quick. If somebody, like I know you said your phone number. We're going to put, and I just want to make sure that anybody listening can find you. So are you still doing your radio show? I know you were doing your radio show at one time.
Yeah, so I did the LendwithBen show for 3.5 years on a talk station, and I recently vamped it up with a music station, and I decided to go a different route for the moment. I have a video production studio in my office that I've built, and so I'm going to be vamping out a lot of content in the coming months on there. What I found was with terrestrial air, I love it, but you really need to be on a talk format in order for that to be, in my opinion, fluid as far as having a show. I mean, I could spin tracks for 30 minutes and talk for 30 minutes, but I would rather have a full show where I can interview who I want to, do the things that I like to do to get information out there to folks. But Mitch, it really boils down to getting the news out there in an efficient manner and like you said, telling folks the truth. So be on the lookout for a lot more social media activity as it pertains to videos, interviews with local community leaders, things like that coming right out of my video production studio.
Awesome. By chance, do you have recordings of those shows that you did on your radio?
Yeah, they're on my Facebook business page, Lend with Ben Hawkins. You can go there and click up. My goodness, you can go back 4 or 5 years, 6 years. I think it's still find a lot of content from where we were doing the show before. We used to tape it live and air it on Facebook, as well as have it on terrestrial air. So yeah, go check us out. Len with Ben Hawkins. Again, you can give me a call anytime, weekends, evenings, whenever, at my personal cell, 910-352-3373. Visit the website at LendwithBen.com.
Awesome. Well, Ben, I tell you, it's been really great spending a few minutes with you today. I don't get this much time with you, because we're both busy, and we're not really that close to neighbors. You know what I mean? You're in Wilmington, where the fun is, and I'm up here in the middle of the state where all the trouble is.
Well, Mitch, you're a great guy. I love the messages you're putting out there for folks. You're a good man of integrity, and I'm glad to call you friend.
Thank you, Ben. I've worked really hard for that, and that's what a lot of these companies, like, I have to watch, because I'll tell them straight up, like, I've worked too hard for my reputation. I've got a good reputation. I'm gonna guard it. I'm not doing anything that would ever tarnish or hurt that trust, because I'm like you. I've made a lot of promises over the years to a lot of families, and a lot of families, I take that as a responsibility. I mean, these people have trusted me, and I've actually called insurance companies and got them to pay for stuff they didn't have to pay for, because I explained to them about this. I have a little speech I call Trust and Public Relations. And I explained to them that, hey, look, I went to this person's house and I asked, and I told them it was okay to trust you. And now we're having some kind of issue, and so now what's on the line is my name, and I'll tell them straight up. I don't care how big the company is. They're not going to put a mark on it.
I love it, man. You go to battle for your clients. I love it.
I do.
That's the way to do it, my brother. You're doing a great job, and just keep it up. I'd love to come back on your show sometime.
Oh yeah, we will, because I tell you, everything is changing so fast. So yeah, we definitely want to stay current on all this stuff. Well, I think our time on our recording is running short, but
that's good. That's a good timing, Mitch, because the kids just walked in from school. Okay. So that's perfect, my friend.
Yep. We'll see you again soon.
All right, my brother.
Have a great day.